I think the message that I would say on it is, uh, the best tech solutions don't always come out of Silicon Valley or out of New York. We're building this here in Detroit. And I think that stands for something because we understand this problem much more uniquely than I think a lot of other software providers do. But the only reason we do is because we go and talk to other people in the Detroit area. And I think that is something that, we kind of have this work hard, stay humble attitude in Michigan, which I think is phenomenal. But at the same time, too, we need to be proud of the community that we have to allow manufacturers to get the help that they need. And I think that, the community also should rely on Michigan solutions. We should have Michigan companies helping out other Michigan companies.
Welcome to the Cashflow Chronicles Open Forum. I'm Matt Allison, a commercial insurance advisor helping businesses protect their cash flow by managing risk and putting the right protections in place.
And I'm Brad Metzger, a commercial lender specializing in finance solutions. From lines of credit and term loans to real estate mortgages, I'm here to help businesses grow and stay flexible.
This podcast is a community-driven conversation for CFOs, finance leaders, and business owners who want real insight into cash flow, credit, and financial resilience.
We keep it practical, collaborative, and to the point.
Powerful finance conversations in under 40 minutes, built for busy professionals. This is the Cashflow Chronicles Open Forum. Today we had Nishant Dixit on the Cashflow Chronicles Open Forum to talk about payment behavior in the automotive sector and what delayed funding is really doing to manufacturers here. We unpack the growing gaps between when work gets done and when suppliers actually get paid, and how FinTech, specifically powered by AI, is stepping in to bridge that gap. If you're in manufacturing, automotive, or finance, this is a pretty practical look at how technology can stabilize cash flow when payment cycles stretch longer than they should. As we all know, it is a growing challenge. Again, this is the Cashflow Chronicles Open Forum.
Walk us through your story and what really helped you establish Alicio Fi as a founder for a startup.
Sure. I'm a Detroit-based entrepreneur, grew up around here, always seen small businesses here that have, struggled over the years. And I always wanted to help out. When I graduated from college, I went to, college in New York at Columbia University. I originally went there thinking I wanted to be a diplomat and realized very quickly that, working on helping people get it, visas wasn't something I was as interested in. And so I ended up taking a role when I graduated with IBM and worked with IBM in their strategy group and fell in love with technology, fell in love with emerging markets, went on to go start a business where we were basically helping small, medium-sized businesses in emerging markets get better access to working capital. And we ended up bringing that business from Hong Kong into India into Latin America, and then ultimately exiting it to a Mexican AI company. And I'd always been interested in what's going on between the US and Latin America. My wife is actually from Colombia, so we speak Spanish at home quite a bit. And so when you go look at the US and Latin America, we trade around $476 billion with Mexico, and $158 billion of that is automotive parts. And I grew up in Michigan. And so I think it was sort of a natural kind of take to go and look at that sector. And I think, as you go down that path, you kind of realize a lot of these manufacturers are struggling and have been for many years because of this gap that we have in Michigan of around $4 billion in working capital. And so each manufacturer, especially for smaller tier 2s, tier 3s in manufacturing, is roughly $330,000 per manufacturer. And I think that this is something that a lot of companies say that they want to address, but they're not really sure about how to go about it. And so that problem seemed interesting enough to me to say, hey, I grew up here. I want to see more Michigan manufacturers do well. I see that we do a lot of trade with Latin America. Let me go explore this and kind of pull the thread and see where we can help.
Yeah, I think that's a great point. Because if you look at the automotive sector more specifically right now, a lot of them are facing the margins aren't there. There's cash flow challenges with that transition from EV back to ICE. Sorry. And then BEV. It's always interesting as far as people outside of Michigan that understand how the automotive ecosystem works.
Sure.
Because they don't understand it. And it's their bread and butter here in Michigan. I think Brad, from a banking standpoint too, can speak to that as well.
Margins are tight. You have to control your cost, whether it's being material or whether it being your employee cost. I sat in on a presentation that kind of talked about they know how much their part should be for.
Right.
It's like they know the answer. How do you get there? So I think where in your world, you can come in as a solution to help control cost, to help improve that margin for them,
That's right. I mean, I
get
think
paid faster.
absolutely. So I think when you look at payment terms in manufacturing in general, whether it's in automotive or in fact in aerospace, I think it's even worse. You're looking at 90 to 120 days or more. And oftentimes what you hear from purchasing folks is you haven't made it in purchasing until you've put a sub supplier out of business, which I mean, just from the beginning,
Partnership.
yeah, exactly. It's a great partnership. And I think that when you go look at how other countries are sort of doing this, and people kind of often talk about China speed, the way that the supply infrastructure for China is often talked about is as an oval, where the suppliers are working together on projects for a larger manufacturer. And I think that level of ecosystem integration we used to have, but now we've kind of evolved more into this pyramid structure where it's the OEM pushing payment terms down to the tier one, who then pushes them down to the tier two, and kind of asking a tier two or tier three supplier to act like a zero interest bank for a larger buyer.
Right.
And beyond the fact that they're the least well capitalized to go do this, I think they're also confronted with the fact that to Matt's point, you're asking these manufacturers to kind of move on a dime. You were doing ICE, you moved to BEV, now you're moved back to ICE. Now some of these manufacturers are struggling with tariffs. It's not very clear what's going on with trade policy. And so they're just more and more cash constrained. And this becomes a huge issue for them when they kind of think about, how do I want to go manage this? And so that's really where Aliso kind of comes in. Where we're an AI native system. We connect to your existing tools that are there. So a lot of these smaller manufacturers are sitting on top of QuickBooks as their main kind of accounting software. They may use a legacy ERP system like Plex. Most of them can't afford to go and use SAP or NetSuite. And when it comes to banking, they might work with 5 or 6 different banks, but the financial controller or the CFO at this company is basically doing everything on Excel. And they have a CEO sort of sitting on their head, kind of saying, hey, go find me more cash so I can go qualify for a contract. And they're not in a great position to go and tell them when this buyer is going to pay them back. And, I think that creates a lot of strain for these small businesses because they got into this business to go make widgets. They didn't get into this business to go and manage their cash. And I think that offers us a lot of opportunity to go help them out when working, in an ecosystem with banks, potentially, trade credit partners and others that are out there to create a new way for a lot of these manufacturers to get the money that they need and qualify for the contracts that they want.
Mhm. We talk about automotive being one of the main industries that you've worked with the focus being in Mexico, typically North America,
Sure.
right now. You've talked about the other countries. What other industries have you seen it being beneficial outside of automotive?
Sure. So I think aerospace is something that has a lot of opportunity. I think from a state perspective here in Michigan, we're trying to get a lot more of these manufacturers to diversify. It's harder for them to diversify if all their capital sort of tied up in waiting for a buyer to pay you back. And so vertical mobility, so drones is another area, where people are,
That's coming.
that's coming. And I think, we want these tier twos and tier threes to be able to diversify, retool the line to get into that industry. And so that's a huge area of opportunity for us. I think the other, that comes in is consumer durables. So I think it's sort of interesting that at one point, a lot of the automotive companies used to own electric appliance companies.
Yeah.
It's like fridge companies, et cetera. So like the Whirlpools of the world are interesting too, because they also have these tier two, tier three manufacturers that are kind of struggling. So manufacturing in general, I think is a key area. Other areas that we might look at in the future could be even in retail, where you go look at in retail, payment terms are terrible. Let's say we're making something for TJ Maxx. They're going to pay you on, net 90, net 120 payment terms. You're asked to take a 2% payment discount. Is that the right deal for you? Should you do that, or should you maybe choose some other type of a financial product? How would the CFO or the CEO of this company know? And I think that is a direction that we can go in to go and surface a lot of these opportunities where, what type of financial product makes sense for you at a given time.
So, would you say that your program or what you offer is more or less a bridge, or is it a long-term solution? By this, I mean, hey, I want to bid on a new contract. I need to expand and I need that cash.
Right.
it'll get you the cash up front, but is it a short-term play or is it a long-term play?
So for us, I would say it's a long-term play because fundamentally what you're changing is how your financial controller and your CFO are looking at their numbers and generating their numbers. And so to give you an example of that, right now, a lot of these companies are using Excel to go in and kind of put it in their three-statement financial, models, et cetera. What we would do is, because we're extracting data from the major sources you need, your payroll data, your ERP data, your bank data, as well as your accounting data, we can give you a financial dashboard that is connected through an ecosystem of AI agents into your email. So we will, for a company at billing at whatevercompany.com, parse their inbox with 98% accuracy because we train on 170,000 emails that are doing manufacturing type of work. So you can go from an email to a quote or invoice in seconds. That, most importantly for a lot of these manufacturers, is formatted the way your buyer wants to see it. Because why do you not get paid on time? A lot of times it'll be because, your buyer will say, oh, you messed up this sort of individual term.
Right.
Yes.
It's not consistent and it's confusing as to how either way it's laid out or it's buried within the document.
Right. And this is something where, of course, invoicing software has existed for years, but are you able to go and account for the fact that there are over 100 different PO formats? And, like I said before, a lot of these manufacturers got in the business to go and make widgets. They're not thinking about all these formats for POs and so forth, right? And so if we can help them with that, what we also can do is, which, in the AI world used to call orchestrate quote to cash, where out of 15 invoices, which invoice should you go get early payment on, or factor, or use your credit line to go and pay? And we'll give you that analysis for a financial controller or a treasurer to go and make that decision in real time. And we start doing it with you when you're small, but we scale up with you, offering you, for example, other financial products as you move along. So you might try to get factoring in the beginning, but move on to getting an SBA loan. And we can say, hey, these are the providers for SBA loans that exist, and this one might be the right fit for you, and kind of move on from there. So it is a longer term sort of a play, because the idea is we have that financial information that makes sense for you, but also we can help you go and surface contracts that may be in your industry or in other industries. And does that contract help you? And I think that really changes the way that manufacturing companies will work.
Yeah, several of my customers were automotive,
Sure.
right? That was in 2000s, 2010s. All of a sudden, they realized when that all kind of came down that they're like, yeah, we need to diversify. And most of them did move into part of either, I'll call it off highway, doing construction
Sure.
components, or aerospace and defense. The biggest thing they found out is the terms are different, the quality is different. It's just different. It's
Yeah.
not the same. And where they've had to pivot, that upfront cost was a little bit expensive for what they did, but now they're flourishing. They're doing really well.
Right.
But trying to bridge that gap, I think, could be a little bit tough. But I think you have a solution that may be able to help.
That's right.
It'd be great.
I think, I think it also gets into how do a lot of these manufacturing companies sell right now. And a lot of times they'll go to a purchasing fair. You'll have all these stands there. There's a QR code. You scan the QR code, and literally you go home and you pray that you got chosen for a contract.
Right.
And from our side, we're able to go and surface contracts from Michigan Minority Supplier Development Council or other groups that we work with, where you can say, oh, there's an aerospace contract here. And we would tell you the financial implications of that contract. What do the payment terms look like for you? What could it mean for you in terms of retooling your line, and figuring out, does that upfront cost that you mentioned make sense to go and pursue or not? And I think that level of decision making is something that a lot of these smaller manufacturers have never had.
It's getting the data that they don't have today to help them make a better decision.
Right. And also leveraging the data they have today, with that data that they don't have,
Organizing it.
to organize it in a much more effective manner to make these decisions.
You mentioned about how it'll integrate with an email and just read, interpret, and bring in data.
That's right.
So one of the things we always run into with banking is fraud.
Sure.
So is it able to assist with identifying a potential fake invoice? Because again, you've seen a lot of different invoices from a particular industry or customer. Are there fraud indicators or fraud things that you can kind of bring to the attention?
Yeah, sure. So, and on that front, first off, when we would go in and do any underwriting for, let's say, an invoice or for factoring, we work in tight knit value chains. So, like automotive, for example, we'll know if you have a vendor code from your buyer. we'll know if that buyer has initiated payment. We'll know if has this product that's been produced, has it reached the factory floor? And so you're checking for 2 to 3 leading indicators before you even consider underwriting any financing on it.
Okay.
And then I think more fundamentally, you're using our software to create the invoice, and you're using our software also to do your payments. And so if I know that this invoice is legitimate and I've seen your payment history because we'll help you with ACH payments, with your other types of cross-border payments, that gives us a level of surety that this is a legitimate invoice because we're also verifying it with your buyer.
Okay.
So what I was going to ask, FinTech. Obviously, FinTech is growing. You bring up AI because I think the mystery question, even in banking right now, is where is AI in banking? Because you want that human touch, underwriting, things like that. What's some of the feedback you've heard regarding like AI into finances and the future of the business as far as just the FinTech in general? Has there been some apprehension to trust AI within a business and financials?
Sure. So I think that, it gets to what's the level of understanding of AI in general, maybe amongst the general public, and then I think when you start getting closer into the finance kind of world, I think what you see there is people are worried about hallucinations. So could we cede too much of this over to an AI that is going to go in and do origination, for example, without any human oversight? And I think this gets into a lot of what we do, where by going in on the inbox side, even for our end user, and allowing the financial controller to go through and have quick actions that are generated from these emails with they're pertinent within the app. You're taking something they already do and allowing them to continue doing that, but automating a portion of it. So now if I take that into the lens of the risk officer deciding whether or not that they need to go and approve this or reject it, a specific underwriting for an invoice, it's a similar idea. The idea is the agent is triaging for you. It's surfacing the problematic kind of issues as opposed to replacing all of your work. And I think that's what's important, is that what's the confidence of this, and can you also do the audit trace, where if something went wrong, do I know why the AI made this decision so that I'm able to go correct it? Which is the way that we would do that in processes right now. You would have an ability on a manual underwriting situation of going to track it. I think that's the important piece that some AI developers are missing, is not putting in that level of tracking. And I think if you do that, you can assuage a lot of these concerns that you brought up.
And it's interesting. I was just listening to a podcast last night about children. Their development, their educational development has gone down significantly with the use of technology. And what this individual was saying, it's like they're asking AI to create things for them,
Right.
versus creating it and then asking AI after the fact. And the results are dramatically improved. But I think it's a critical delineation when you say, hey, this is my idea, improve it,
Right.
versus asking AI to take it first, like create something for me.
Yeah, and I think it gets to a fundamental question. You can go into any AI, let's say ChatGPT, or if you're talking about Claude, or if you're talking about Perplexity, et cetera, and say, build this for me.
Yeah.
But most of us are not asking how, or what did you do to go make this, or what were the steps that were there. And so that maybe gets to an element of human nature in dealing with tech, where you're just like, just do this for me. And I think that, in that, if you're focusing on the how and the why, you can go in and build these systems, especially in the B2B context, to address a lot of these compliance issues that a lot of companies should have, when you look at this. And so, that's what we strive to do.
Yeah, I think that makes sense. I think just looking at various organizations and their trust of AI for external resources is private data we don't want AI to access. There are some concerns, and I can speak to our employers. There are various guardrails in place to access AI. I think anyone can reference that, unless it's approved, of course, your security.
Yeah, that was one of the things I'm kind of happy with, is being able to use AI for what I do. And a lot of things that we'll do is we'll take our loan approval document and match it up against loan documents to see if it matches.
Sure.
So a task that typically would take me maybe an hour, now I can get done in 5-10 minutes. So again, value add. But I think then again, you got to trust but verify, right?
Absolutely.
I know the answer, right?
Sure.
That's where we're going back to what you were saying was,
Exactly.
I don't know the answer, just build it. So there's a different use of how people use AI. But yeah, I enjoy using it, but I know the answer.
Right. And I think that gets into a question of the next generation of, of people that are working in banking or taking the roles that you and Matt have in the future. Will they have the skills to have the critical thinking, really, to be able to go and address this. And so I think that's why I think that what was going on with this audit trail, what's going on in the how and the why, because I mean, ultimately, I think if you're going to go hire somebody, you want to go and have somebody who's adaptable, who understands what's going on and can trace this.
They understand the process of how and the steps it took to get there.
Absolutely, and I think
There's a gap. They know where it was and they can fix it.
Exactly, and I think that gets to a broader question of how are we using it, and also how are people using it in school, after school, etc. And so, I mean, I think ideally you want it to be more of, hey, let me help you think through this, as opposed to let me just go build it for you. And that is something that we when companies are pushing their tech service providers on creating solutions in-house, it should be more to that level. I think as we move from generative AI, where it's sort of, hey, it has the capability to go in and fill out this document for you and fill out this, maybe in the school context, this exam for you, in the worst of cases, you want to move into, okay, well, this is how it did it, and this is how you should go learn from it, and this is what where this industry is going. And I think that is something that companies also have to push their providers for, to say, hey, when we're going to make an instance for me within my company, I want it this way to go train my employees this way.
I think that's an important point with AI in general, because we don't know what the future of AI looks like.
Right. And so the guardrails have to come from us, right? And I think that, and I think coming back into, what we're doing, I think this, the whole reason that we were looking at this is a broader kind of question, which is, we say we want to have nearshoring and onshoring. And, I think fundamentally for that to happen, you need trust in the market. And for trust to be there, people need to feel like they're getting paid on time. And so, we want to leverage AI to go solve that broader question. I think similarly, other companies should be thinking about that, where it's sort of, well, what is the large burning question that your customers or clients have, and how can AI help you get there? But more importantly, how are you training your employees to go and address that, improve it, and make sure that if something went wrong, that you can fix it, as opposed to just sort of abandoning the project.
Or calling a third party to fix it for you.
Well, that too. I mean, I think, you definitely want that knowledge. Right. And that, and I think when we see that too, where historically, especially, we're talking about banking software previously, a lot of companies will go in with these enterprise contracts that are, 150,000, 200,000. You want to make a change, 10,000, 15,000. AI allows you to go in and change the entire operating model for that. Maybe you're just paying on a transaction basis. Maybe, instead of the monthly subscription, it's usage based. And those types of models are things that a lot of us are not used to, but it may make more sense for these businesses to verify and think about.
Let's put it back.
Sure.
What would be your absolute perfect customer for what you're looking for?
Yeah, sure. So for me, I think our perfect customer is, a manufacturing company here in the U.S. that does some work in automotive or in aerospace, perhaps is turning around $10 million in revenue. It could be $5 million in revenue. And their average contract size is maybe, for invoices or receivables that we look at, $150,000 and up. And when you look at this, these are the companies that need help internally to go qualify for the SBA loans or other loans that are out there to go and scale up. Mid-sized companies also have, other issues where maybe they're not looking at factoring as a solution, but they are interested in asset-based lending. They may be interested in other types of equipment financing, so on and so forth. How do you go and figure out what financial product makes sense for you? That's a lot of what we would go and help people with. I think when you look at it for how do we go and partner with industry, if you're an asset-based lender, if you're a bank, if you're someone else who services this ecosystem of manufacturing, and you're trying to go in and work with these manufacturers, we're sitting there with the financial controller or the CFO of that company. Because if you think about, do I want to get that in front of this person at the right time when they actually need my my services? That's really where we would come in.
Okay.
So what does the typical engagement look like when you first meet with a business?
Sure. So I think when we first meet with a business, we'll go in through a variety of different sources. So we are starting a pilot with a tier one buyer here, where we may come and go meet this manufacturer from the tier one buyer who is introducing us. The other way might be through software, where literally we're not meeting them in person. Our software is embedded in a contract procurement platform, which Michigan Minority Supplier Development Council has. We're also expanding this with Conect Americas, which is sponsored by the Inter-American Development Bank. So essentially, it's a database of all the businesses from Argentina all the way up to Alaska. So everything in this sort of north-south corridor that's there. And then finally, it could be through a fractional CFO. So you've got a lot of these fractional CFOs that are out there where they will go and meet a business maybe once a week, maybe once every 2 weeks, and they need to leave behind some processes that are there. And so, that's where that typical sort of introduction would take place. After that, you come onto our system, you are connecting into your QuickBooks, your ERP data, et cetera, that we can do in a matter of minutes. And we really focus on time to value. So what could we do in contract acceleration for you, in payment acceleration for you? And try and surface that for you so that your financial controller or the CFO that's using the business software is seeing value, from day one.
I think that's important when you talk about what is the value add in the conversation, or you move forward with a particular new solution. Where's that value? And I think you pointed that essentially right there, where you're going to see value from day one, just as far as the process goes.
That's right.
So walk me through, what was the biggest issue when you started this business that you thought, hey, I have the solutions and the tools and the team that's going to help me bring this to the end state?
Sure. So I think that, when we started out, a lot of what we were doing was kind of just going out to talk to different customers. So we talked to over 50 different manufacturers in the US, in Mexico, in Colombia, in Brazil. And we sort of said, what is the biggest issue that you're facing? And they're saying, I don't know if my counterparty is going to pay me on time. And I think that, is where, we started out with a thread, and we just wanted to go pull that a little bit more, kind of saying, okay, well, what do you mean? So we started going to purchasing fairs. So here, Stellantis will run a purchasing kind of fair between buyers and suppliers. Toyota runs them. And we went to all of those to go figure out, what are the individual problems that, that people had. Originally, we thought, oh, people just need a factoring solution. Realized everyone's kind of got factoring solutions. There are varying kind of opinions on whether or not factoring is a good thing or a bad thing. And what we realized is that these companies need to get a little bit of that early payment to go move up the capital stack, to move on to financial products that make more sense for them. So essentially what they really needed was a system that would help them get paid faster, help them qualify for more contracts, and help them grow cross border. And so we thought, how do we go and make that from a tech or operational perspective? And then, the big shift for us kind of came maybe in February last year, where we realized we needed to be AI native. And the reason for that is sort of that you could go and achieve so much more than you could in a typical software as a service product. And it's also just a question of, does this software have the technical ability to go and achieve what you're looking to go do? And we realized that was the direction we needed to go in.
Yeah, I think that makes sense. So in closing, what do you want the community listening to this podcast to know? And how can we help you all together, help you grow this platform?
Sure. So I think in a lot of respects, I think we do need to put the emphasis back on manufacturers, tier 2, tier 3, getting them the tools that they need. And that is something that we can do internally when we talk about it being AI native. But we really need to work with banks. We need to work with other financial product creators in the market, as well as trade credit insurance providers, for providing a lot of intelligence on that. And I think the message that I would say on it is, the best tech solutions don't always come out of Silicon Valley or out of New York. We're building this here in Detroit. And I think that stands for something, because we understand this problem much more uniquely than I think a lot of other software providers do. But the only reason we do is because we go and talk to other people in the Detroit area. And I think that is something that, we kind of have this work hard, stay humble attitude in Michigan, which I think is phenomenal. But at the same time too, we need to be proud of the community that we have to allow manufacturers to get the help that they need. And I think the community also should rely on Michigan solutions. We should have Michigan companies helping out other Michigan companies.
I remember Debbie Dingle speaking 2 years ago. She said DC currently does not understand the Midwest in manufacturing. They think it's out in LA.
Right.
And that's the whole EV push. She's like, I'm fighting for manufacturing. That's the core of America. So I think that's super relevant, because Silicon Valley doesn't understand the roots of the Midwest and the employees that are working hard every day, and the people that just manufacture widgets, and they just want to provide a critical asset to the overall supply chain.
Right. And I think that's a key point that you brought up. And I think they have solutions here. For example, there's Apple Manufacturing Academy, which I think a lot, any manufacturing company that's small can go in and attend. But what you'll find there's a lot of focus on PCB manufacturing, so printed circuit boards, which is great if you're working in the computer industry. But here we have a lot of manufacturers that are building completely different types of structures. And so is there the understanding of what these manufacturers need, in the market? And so it goes to your point. We obviously build a lot here. We have a lot of technical know-how. It's in industries where if we worked together on them and collaborated more, we could see much more value driven out of Michigan and see companies stay here more instead of maybe deciding to move to Ohio or Tennessee or other places.
Yeah, I love the vision. I absolutely do. I think that's really closing up. Really appreciate your time, Nishant.
Oh, thanks so much for having me.
Excited for what you're going to bring to the table.
Thanks.
Appreciate it. Thanks.
Thanks.
Hey, you've made it all the way to the end. Thanks for that. Make sure you subscribe to the Cashflow Chronicles Open Forum newsletter, drop us a like, and follow us on LinkedIn and YouTube.